much. Welcome to the Halftime Report. I'm Scott Wapner, front and center this hour. It's the busiest week of earnings season with nearly a quarter of the S&P 500 reporting, headlined, of course, by the best performing mega cap over the past year. That is Alphabet, and one of the worst, that is Amazon. We'll trade the markets with the investment committee. Tech is moving. The mega caps are. We will discuss with Joe Terranova, Stephanie Link, Shannon Sakosha, and Josh Brown. I'll show you exactly what I'm talking about. NASDAQ is down more than 1 1/3%. And tech's getting hit really hard. Josh, you know, all of the mega caps are down. There are some stories, out there about the impact, and we're going to get into these a lot deeper. Anthropic has this new tool. It's weighing on a lot of the software names. NVIDIA and OpenAI, more drama, apparently. We're going to get to that. But how do you see what's happening in these markets?
I think we have one or two of these periods every year. The cause is always different, but the effect is always the same. Some of the most popular trades of the previous uptrend just get absolutely nuked. And I'm looking at some of the most widely traded, most popular stocks amongst both retail, institutionals, hedge fund darlings, just nuked, like one after another. I'm not going to say it's healthy or it's enjoyable. As Taylor Swift sang, it's all right. We're dancing through the lightning strikes. And every day it's like 5 new ones. So even the companies that have great reports you're not really getting the benefit. But the companies that have even the slightest confusion around them, forget it. And that it's just one of those periods, and you have to kind of run it out. Palantir is a really great example, which I know we'll get to later, but just consider in a normal market environment like what we had really since the start of the year, this name would be holding its 11 or 12% gap up open. It's only up 5% today. Imagine a stock like this after a report like that going red. And it tells you risk appetite is coming out of anything that has to do with technology. Just really quickly, the ground zero for this particular beating, where you have stocks like Microsoft in a 25% drawdown, which is incredible. The ground zero is the application layer of the software stack. Every vertical, every cap size, doesn't matter. If you're a company that has anything to do with selling the application layer of any technology process you can think of, even cybersecurity, the stock is not safe right now. They're coming for these stocks with massive sell orders.
Let's look at this Anthropic story for a moment, because it appears to be having a somewhat dramatic impact on several groups of stocks today. I mean, Microsoft's down 2.5%, but they've released a new legal tool that is weighing heavily. You could look at some of the, not necessarily NVIDIA, some of the SaaS names. This is a software story, guys, we're talking about here. The IGV is now down 27% from its 52-week high. If you look at a lot of the SaaS names today, and we're showing you some of the software names, but Intuit, there's DocuSign, there's Snowflake, there's Twilio, there's ServiceTitan. I gather if we looked at CRM or ServiceNow, you may see some similar type moves in this market, and they're not the only ones. There's some financial data providers that are lower today. So there's what I'm talking about. There's a ServiceNow down near 7. Let me see CRM. Did we ever show that? I'm not even sure. There's the exchanges, which are down. I don't know. You invest in some of these names, like a Snowflake, for example.
Yeah, I only have Snowflake, Synopsys, and also Palo Alto. I actually think that the cyber companies are buys right here. I mean, they may go down because all of software is getting hit, but I think that you need, and you talk to chief technology officers, and they are spending on AI and they're spending on cybersecurity, and I do not think AI is going to take over cybersecurity. I actually think it's going to be the reverse. I think cybersecurity is going to be bigger than AI. I've said it many, many times. Overall, tech is crowded. We all know that. It's 35% of the S&P 500. Today, growth is down 150 basis points, and value is up 30 basis points. So there is, to Joe's point, a massive rotation, which has been happening for the last several months. This should not be a surprise. We've been talking about it. The reason is because the underlying economy is actually stronger than most people had expected. And we got very good. It has been services. It's been part of consumer. It's been AI. Now it's manufacturing, because we talked about this yesterday. We got Chicago PMIs. We got ISMs yesterday on manufacturing, PMIs on manufacturing. All blew out expectations. All are above 50, which is expansion. And that means the overall economy is doing well, better than people thought. And you want to own cyclicals. And that's why you are seeing this rotation. And the problem with software, I think you have to be very, very careful and selective. The problem with software is there's no proof point short term that's going to dispel the concerns.
Great point.
There is no catalyst. So you want to be very, very careful. And that's why I say the one I would look at, or CrowdStrike 2, you can own cybersecurity.
Fear rules until there's something to discredit or discount the fear that people feel about that question. Is AI going to kill software?
Only 67% of software companies have beat on revenues, and that compares with 83% of the tech companies that have reported outside of software. And so I think that the challenge here is that, to Steph's point, if you have an opportunity across the market to be able to add to companies that have beat on revenue and beat on earnings this quarter, and you still feel like with each release, whether it's Claude or whether it's Anthropic, there's going to be a continued pressure on these companies, there has to be some evidence for you that they can turn the corner on those revenues and grow their revenues in the second half of the year, because you are not in a narrow market in terms of the ability to grow earnings this year. And so to underpin some of Steph's points, if we didn't have an alternative, if there was no alternative to technology like there was a couple of years ago, then I would say maybe you could step into some of these names, Scott, but there's plenty of other places to go. And so don't spend so much time looking at what the S&P 500 is doing. Rather, look at these other sectors that continue to have momentum in this environment.
Joe, I mean, Josh, when you look at like a Service Titan, for example, which I think you made yet another bullish case on the other day. You know, that stock's almost down 8% today. This is one of those stocks in the eye of the question, on the storm around that question. How do you think about this now?
Yeah, they don't care. They don't. Right, you're exactly right. They don't care right now. When you see selling that looks like this, and it's day after day, and it's coming at already a 52-week low for most of the stocks in the index, and it's affecting the Microsofts of the world, it's indiscriminate. It's a liquidation. It's sector-wide, industry group-wide, and they don't really care right now what the difference is from one versus the other. And then what the second phase of this, you see some of these, the selling gets exhausted. That's not going to happen in the tertiary or even the secondary players. That'll have to start with the highest quality, most defensive, most defendable moats in the space. So if you're in, let's say, like a mid-cap enterprise SaaS name, and it's not, you know, it's not like a top 20 market cap, they will bottom. They're not going to bottom first, and that's not where we should be looking.
Yeah,
so
no, but you know what else is interesting? You know what else is interesting? Let me interrupt you just for a second, because I like your reaction to this too, and then I want to hear from the group. If you look at what's happening to some of the private equity and larger private credit players today, those who have, you know, lent money to software firms, these stocks are getting crushed. I mean, Ares is down 11% today. My screen is
KKR is down 9.
Blue Owl is down 10, and the losses across the board here today are pretty dramatic.
I would say two things to that. Number one, look how quickly we switched from, oh my God, it's a bubble in data centers, to, oh, wait a minute, actually, a lot of businesses might be worth way less than they thought they were, because we're actually seeing adoption of these tools faster than expected and disruption from these tools faster than expected. How long did that shift take, Judge? 4 days? I know you do this every day. It's almost imperceptible, but it's pretty clear. We're not talking about AI bubbles anymore. Now we're talking about, wait a minute, AI might not actually be bullish for the stock market. That's a really, really big narrative shift, and everyone seems to have adopted it all at once. But the second part of that question, if every corporation is imminently disrupted, permanently disrupted, who's paying for all this stuff? And so that's like really something that I don't think will get answered in one day. So if this is the cause of the 2026, the first correction of 2026, so be it. But now, that seems to be a really big question. And you know what's safe? You know what seems to be safer? All the physical commodities and the things that you really can't disrupt with a software reboot.
Yeah.
And it's a really interesting, Joe was saying that, and I just wanted to echo what he was saying. It's not a market where there are no stocks going up. It's a market where there are very specifically disruptible stocks that are dropping like stones.
NASDAQ right now, I mean, Shan's down 1.5% on the day. So the slide in tech that we were watching as we came on the air looks like it's getting a little bit worse anyway.
I would compare some of the pressure that we're seeing on private equity, private credit providers to what we saw in the aftermath of COVID with commercial real estate. There's an assumption, just as you saw with real estate funds, REITs in particular, that there was this overabundance of office exposure. You're getting that right now in private credit and private equity. The other thing, Scott, is that there are a lot of questions about the overlap and potential redundancy in private credit with your public portfolio, but that has been building. This is nothing new. You're just seeing the evidence of that in the last couple of days of trading.
So the other story that we need to touch on, and on any other day, I guess we could have easily started with this, because I mentioned at the very beginning of the show, the mega cap stocks were all lower, led by NVIDIA, which is down for a second day, and there it is, down almost 3.5%. That stock's about at the lows of the day. Is there growing friction between NVIDIA and OpenAI? Day after that report about the $100 billion that Jensen Huang said was never a commitment to OpenAI. Now there's this new report that OpenAI is apparently dissatisfied with some of NVIDIA's chips for inference workloads, that they're reportedly looking for alternatives. That's from Reuters today. What do we think about this name, which, frankly, we used to talk about, I feel like, almost every day?
We did.
We haven't talked about it that much.
Well, we were talking about it every day because it had an astronomical rise. Momentum took hold, and it was supported by really spectacular revenue growth. And you saw that again last night. 70% revenue growth for this company reminded everyone why this company is perceived to be one of the software names that will survive the AI automation that's cannibalizing right now the software industry. So the stock, unfortunately, today is not trading as well. You would have liked to have seen a little bit more of a breakout. It's not trading well, though. I don't think for idiosyncratic reasons. I think it's more about what's going on in software overall. So it's one of the 5 names that we still maintain from the 17 that we previously had in software. It's one of my favorite names. We've held it for quite some time at $16. And besides Palantir, the other name I would suggest would be Zoom. I advocated for it last week. I bought it personally. It's pulling back right now into the supportive moving averages, which is rare in the software names.
It's funny, we spent the last, I don't know, however many minutes talking about, these companies, but these huge personalities.
Yeah.
Jensen Huang, Sam Altman, Karp, and Palantir. And don't forget about Elon Musk today and the news that SpaceX is now formally acquiring XAI. They value the combination at $1.25 trillion. I mean, you can invest in these things in the private markets. And anybody doing that? No interest?
Private equity's doing it for sure. The last 10 years, you have nearly 2,500 companies and about $500 billion that's been invested in the private software companies. And I really think what's now happening is we've questioned valuation for years. Okay, now you're seeing the multiple actually contract on these software names. And I think that's what's the dominant force in the market.
All right, let's do this. Let's get away from technology. How about that?
Really? Okay,
yeah.
Let's do it.
Yeah, I mean, we spent like 22.5 minutes talking about it. And rightfully so. Rightfully so.
That's doing well.
But I mean, you have no choice. You have no choice. This is where the action is today. The action year to date has been, with that kind of small part of the S&P 500 called energy, which is up 14% year to date. It's coming off the best week since October of 22. And Josh has bought Devon Energy. It's a new buy. Tell us why.
We wrote a column yesterday for best stocks in the market. Sean wanted to take a look at, all right, if everyone is selling all these tech names, like where is the money going? Because we have a belief system where we don't think it stays in cash for more than a few minutes these days. So we looked at some of the best performing names amidst some of the worst days so far, late January, early February. And of those names, one chart looked really appealing to me. Pulled the trigger later on in the day yesterday, and I remain long. The name is Devon Energy. This is ticker DVN, and stand back, we got a float shrinker on our hands. This is a company that has reduced its outstanding share count by 13% over the last 4 years. The last quarter they reported $400 million back to shareholders through dividends and stock buybacks. They also retired almost $500 million in debt, way ahead of the schedule they had laid out for shareholders earlier. It's not a sexy business. It's natural gas exploration and production, and oil. It's paying a 2.5% yield. But basically, this is the type of stock that they're gravitating to when they come out of the Oracles and the Microsofts. And guys, give me like a 3 or 4, 5-year chart maybe. It's hard for me to do this without candlesticks and moving averages, but this is snapping a downtrend that's been in place since May of 2022. Effectively, the stock's been in a massive downtrend. It's been relentless, and now that's over. So we have very close to 52-week highs. We have a breakout above 40. I'm using the 35 to 37 area as my stop. I'll be checking it each Friday toward the close. Traders might want to tighten that up to 37. Investors might want to use 35. And I'll be rolling that should this trade continue. I think there's very little overhead resistance left here for Devon. I think the stock's going to continue to move.
Okay, we will watch that. Let's do some calls of the day. Boeing reiterated buy today. Bank of America, you just mentioned Boeing. 270 is their target, an execution story. So that's like what we were literally just speaking about. That has wings. That's their quote.
I like that.
What do you think?
That was pretty good.
Yeah.
I don't think there's anything new in this report, Scott, but total revenues and free cash flow are absolutely recovering, especially in the aviation business. Last quarter, they delivered 160 aircraft. That is a massive year-over-year increase and speaks to the CEO and execution and improving. And I think that this company is a very good shot at getting to $10 billion in free cash flow versus negative last year by 2030.
All right, JP Morgan got upgraded today, Josh, to neutral from underperform. At Baird, the target is 280. So that's obviously lower than where this stock is. What's your take on this?
Yeah, I don't know what to do. Wait, so they're bullish, but they think the stock's worth $50 less. So do I sell it and buy it back? I'm not 1,000% sure what even is the purpose of that conclusion. I think over the next couple of years, it's a $500 stock. So I remain long. This is a core position for me. I've probably ignored, I don't know, 10,000 analyst buy and sell calls over the years, and I'll ignore this one too.
It's only about 6-8 months ago that the stock was downgraded, so it's not that long in the how I think most analysts work that you see. I can't think of a catalyst between now and then and now that would make the stock be upgraded from an underperform. You know what I'm trying to say?
There hasn't been. What ends up happening?
Uneloquently as I said that.
What happens is the sell side research is not a public good. It's not a not-for-profit that's issuing research. They want to generate trading activity on the desk. It's the whole point. They want to have calls, and they want to get the hedge fund PMs on the phone with the analyst who could explain what they see going on, and they want 2 or 3 cents a share. So you have to put out research, whether you change your mind or not. But if you do change your mind or change your target, it gets a little bit more attention. The reality is, as an investor, you don't really need a catalyst. Walmart just joined the $1 trillion club today. I don't know, we haven't even mentioned it yet. It's pretty remarkable. What's the catalyst for Walmart over the last 2 years? There isn't one. It's just a core holding that continues to execute and find new levers to pull for growth. And that's how, do you understand? JP Morgan just built a Death Star in the middle of Manhattan. they are not just content with the size that they've become, but now they're going to apply pressure. They are going to be incredibly profitable over the next couple of years, as they already have been, incredibly dominant. And I think you have Jamie Dimon there still for another couple of years. I don't think the next political cycle is the one he wants to jump into. So, like, you know, upgrade, downgrade, blah, blah, blah. Companies paying a nice dividend, buying back stock, executing. I tune it out.
Oh. All right, we're back. Josh Brown's best stocks in the market list. We said 3 names just popped. One is forming a golden cross. Which one is that?
Yes. Well, here's the one that I want to talk about. Targa. I got to do this fast. Targa, TRGP. So we wrote this up yesterday. If some of these charts look like they're going crazy, like we literally published this at 10 in the morning yesterday. So I'm doing the best I can, guys. 2% dividend yield, expecting 22% cash flow growth. They report in 2 weeks. So for this quarter, traders can use the 50-day as a trailing stop. It's about 183 to 185 is that area. The stock is a little bit extended now, breaking through 200. RSI is tame at 72, not crazy overbought. I want to get to WW Grainger. This is tools, equipment, supplies. None of this is disruptable by AI. They reported this morning, stocks up 4%. Again, we talked about it yesterday. They just returned $1.5 billion to shareholders last year via dividends and repurchases. They'll do the same thing again this year. Meaningful resistance at 1,100 and at 1,200. So maybe we just saw the first level break. The next level will be the next challenge. But then beyond that, there are no sellers in this stock. Last one, Corteva. This is literally seeds, like planting seeds. Also has a pesticide business, and I think they're going to spin that off and be 2 companies. Either way, breakout mode, raise their full-year guidance. Cash flow is explosive growth once again after a long time of nothing. Traders should watch for a move above 75, which I guess we're approaching right now on good volume. That's your trigger. I think you could buy it. You see that golden cross, Judge? To answer your question, you have a 50-day crossing above the 200. What that tells you is that the buyers are taking control of this chart. You see the accumulation since that low in September. No reason why this one can't keep going.
All right. If nothing else, today's price action in many names, especially software, and we told you, some of the exchange-related names, we're trying to understand how AI is going to impact a whole large group of stocks.
Yes.
And then on top of it, anytime there's any question, drama, perceived controversy at the very top of the food chain with an Open or a NVIDIA, you're going to have maybe a sell first, respond later reaction.
Yeah, and it reflects the fact that the areas of conviction within this trade have narrowed so substantially. It was memory, and it was Google. I mean, essentially, those are where everybody's panicking into those 2 areas because it was perceived that that was safe from a lot of other things. So I think you can take Jensen Huang's comments about their close ties and nothing going on here with OpenAI, and then you can react by saying, well, anything attached to OpenAI's ecosystem is actually what's suspect in this market right now. And not only that, Jensen has had nothing but enthusiastic things to say about his business in the future for the last 6 months, and the stock has gone nowhere in 6 months. So I think you can kind of believe in the long term, this is where we're going, but have we already paid for it up front on a lot of different fronts? And then, of course, you bring up the point of these moats drying up all over the market, or at least perceived that they're drying up. And it's not just, I don't like saying fintech. I don't think fintech's the thing. But PayPal, Visa, MasterCard have traded badly. They bounced yesterday, not today. So I do think that basically everyone's focused on the negative impact of AI, not really sure where to grab for safety. I mean, look, we're barely off the highs.
Sure.
We've crossed 6,900 in the S&P 17 times in the last 37 days. We're stuck here, but 7% of the NASDAQ's making a new 52-week low today. And the market's only 3% off its high, so there's destruction underneath.
Well, because there's another story to tell that has people still bullish, believing in the uptrend. I'll see you on Closing Bell.
Okay.
We're going to get into this a lot later on this afternoon, and Mike will be back with us to help us get into that. We're back after this. We talked a lot already this week about the rebalance in the Joe T, that's Joe's ETF. One of the interesting names that was added is Pulte Group. as you know, Stephanie's been bullish on housing for a long time, and now you add this. Tell me more.
So from October of 2022 until the end of 2024, we maintained positioning in either one of the home builders, whether it was NVR, Lennar, Horton. We were somewhere at some point. We liquidated those names moving into 2025, and it's interesting because I think there's been really good resiliency so far this year in these names. As it relates to Pulte, the reasoning behind getting back into it, yes, it was able to pass the momentum screen, but it really was the quality screen that this name stood out for us. The return on equity, the debt to equity, very strong. So kind of building back into the builders once again. And it's interesting because once you take that first step in there, there's usually more to follow.
Yeah, Steph, I mentioned you at the top. Nobody more bullish on this sector than you. D.R. Horton, Toll Brothers are the ones you own.
Well, it won't take much because I don't think a lot of people do own these stocks, right? And now if this U.S. home builders now today are working with the Trump administration to produce 1 million homes, I don't know if it's right or not, but if so, that's $250 billion worth of new homes that would come onto the market that would help the affordability program. And at the same time, these companies are minting money. They have, I mean, D.R. Horton has $3.5 billion in free cash flow. I have said this many, many times. They'd rather buy back their stock than actually produce homes. So if this program is right, is accurate, this would be a nice flip for the industry and very positive.
Somewhat antithetical, though, to the Trump administration not wanting private investors to own these homes because it's rent to own. But we're not going to get the supply we need out of existing home sales, though. So there's going to have to be new homes coming on the market to ease the affordability challenge.
So rocket companies, how you play this, Josh?
I bought the dip. I was on the air the other day, and I thought the sell-off was stupid. Maybe it was my final trade. I don't even remember. Anyway, it's right back. So I think the stock is significantly undervalued. They have built arguably the greatest refinance engine for their existing mortgage customers. And now, with the addition of Redfin and Mr. Cooper, they've got a front-to-back, floor-to-ceiling platform for the entirety of the home buying experience. They're going to do very well, and I remain long.
3 o'clock Eastern today. Cameron Dawson, Alex Kantrowitz, Chris Ferrone, Jim Stewart. So we'll kick that all around too. Josh, final trade, quick. What do you got?
ExxonMobil, new 52-week high, new all-time high. Raise the roof.
All right. Thank you very much.
The roof.
Champ.
Talking a lot about large cap rotation, Scott, but a lot of that's going into small caps, so don't lose the thread.
All right. Been coming out of small caps
And
lately.
go-
See, Steph.
Go Pats.
Oh, right. The
Rockwell
hometown team.
automation and robotics in early innings. I expect a good quarter.
Okay, Joe.
Hubble, added to Joe T.
All right. I will see you at 3 o'clock on the closing bell.
That was Josh Brown and guests on today's episode of the Halftime Report. We saw some clips, and my name is George. This is Blue Cloud Trading. It is currently Tuesday, February 3rd, 5:23 p.m. The market is closed, and what we're going to do in this video is go over the stocks that they talked about on the show. Not all of them, but a good portion. And today, quite a few, actually. So we're going to take a look at the Dow, the QQQ, the SPY, the Euro stocks, the Russell, the VIX, which was spiked 10% today. We're going to also take a look at some of the Mag 7s like Tesla, Apple, Meta, Microsoft, and Netflix. And then we're going to look at, I've already previewed these. Are you ready? 35, folks. 35 stocks and ETFs that are mixed up in here. And out of those 35, it's just literally 6 stocks that actually even make sense to consider, in my opinion, based on the technicals. They were all up today as well. And before we get started, let's do this. Let's take a look and see the markets, what happened today. I mean, you can see that the Dow Jones, all right, it started off pretty steady throughout in the morning. And then around 11:10 or so, it dropped, and it dropped hard. And you can see around 2 p.m., the price started to recover. And so the Dow was down 0.34%. The NASDAQ actually, it gapped up slightly in the morning, a little bit of a head fake there. And then the sellers came in and just pushed the price all the way down to these levels here. And at 2 p.m., it started to recover as well. It was down 1.43%. At one point, it was down over 2%. S&P 500, same situation, down 0.84. And the Russell 2000, this one actually held up a little bit for a little while, developing that little pennant that you see right there. And then price got under and it dropped. Also recovered at around 2 p.m. Russell 2000 was actually up, closed up 0.23%. Let's take a look at the heat map. That's going to give us some more detail about the specific stocks in the S&P 500 and how they performed, I mean, you can see a lot of red here in the technology sector, right? So you can see, for example, that Microsoft was down 2.87, Nvidia down 2.84, Broadcom, okay, down 3.26, Google, Meta down, Amazon down, Eli Lilly was down 3.9, but the utilities did well today. Energy stocks did really well. Basic materials actually recovered a little bit. Industrials did really well, and so did the consumer defensive stocks. And the insurance companies and regional banks did pretty well too. Some companies like JP Morgan, Berkshire were up. Um, when we look at the themes, and this is a cool little feature of the software that I'm using here, you can let me just zoom in a little bit so you guys can see that a little better. Okay. Maybe if I press that. Oh, yeah, there we go. What you'll notice here is that the energy traditional, the like oil production, oil refining, anything that you see in bright green, okay, was up over 3% today. So, we're looking at like specific themes. Hold on. For example, space tech, transportation logistics, robotics were up today. Some of them, not all of them. Okay. The commodity metals, gold, silver, precious metals, industrials, rare earth, battery, and recycling were all up. In the defense and aerospace space, drones, space tech, weapons, missiles, manufacturing, and under semiconductor, it was just the packaging. Interesting, up 2.51%. Okay, let's also look at the groups again, real quick. This is just showing us the sectors for the day, and you can see basic materials, energy, consumer defensives, and utilities were up the most. Industrials were also up 1%. Technology down 2.33%. Scrolling down to the 1 week performance, technology is down 4.58. We look at the 1 month performance, technology is down 3.1%, with basic materials in the lead, up 14.99%. Even on the 3 month performance, technology is down 7.68%. Pretty crazy. All right, so let's go ahead and take a look at these. We're going to start off with the index ETFs like the Dow, which is one of the few and only indices that you see here that actually has a blue flag. What that basically means is that when I did the analysis a little bit earlier, what I was checking for is to see how strong the trend is on both the weekly chart with price. Let me get rid of this for a moment, these lines, so you can see uh, price being above all the Ichimoku, okay, moving averages. Now, Ichimoku stands for at a glance. So what we're looking for essentially is price to be above the midpoint of the last 9 periods. That's the Tenkan-sen, the green line. This is a Japanese indicator. It's very old. It's very used. It's very much used by financial institutions. It's been around since the late 1960s. I mean, so it has a lot of credibility and it's very comprehensive and it helps us to identify the strength of the trend. Now, if we're looking at the weekly chart here, you can see very clearly that price is still holding up above the moving averages. One interesting feature about these moving averages, you'll notice that they flatten out. That's because they don't. The way that they're calculated is very different. They take the high and low of each candle, the last 9 periods, and divide that by 2, and then they plot it right there instead of the closing price. So you're getting a much better mean, right? You're getting the average of the last 9 periods. And so sometimes what will happen is it will actually flatten out. Okay. Same thing here with the Kijunsen. It's taking the highs and lows of the last 26 periods divided by 2. So it takes the midpoint of the last 26 periods. And then the cloud itself is an interesting part of this. So it's comprised of 2 moving averages. The Senko span A, which is taking the midpoint of these 2 moving averages, projecting that 26 periods into the future. And then it's the midpoint of the last 52 periods. Instead of plotting it under the candle, it's plotted 26 periods into the future. And so the future cloud can give you a little bit of introspective about how are things looking going into the future, actually, right? So the fact that we have a thick cloud and the single span A here, the light color blue line is above the purple line, that's very bullish. You can see here where it was negative, and we got that signal 26 periods, right? We would have seen that cross, for example, 26 periods back. And you can see how price dropped quite a bit. So that was in April, of course, of 2025, that big drop. Okay, and then there's one final moving average, and that is the Chiku span. That's the current price projected 26 periods into the past in a line form. And what we're looking for with this is the white line to be above the candles 26 periods ago. That's pretty much the whole thing. Now, when you have all these elements in the correct order, as you see right here, that's exactly what we're looking for, and that's you know very bullish. All right, once some of these things start to fall apart, it weakens the strength of the trend. Now, in addition to that, I've also included the directional movement down below here. This indicator. What we're looking for here is the green line, okay, to be above the red line, and that's the positive DI9 above the negative DI9, and we want the ADX, that white line, to be moving up. When it's moving sideways, it just means the momentum is not very strong, and that's also, you can see that it's very evident here by how price is acting, right? Instead of moving up, right? What's happening? It's actually consolidating right now, right? So you can see that little triangle. And so, yeah, price is staying within a very, very, very tight range. But because price is above the moving averages in the cloud, everything looks very bullish here. So I do like the Dow on the weekly chart. Now that you understand all that, what another thing I like to do is superimpose some trend lines like this 496.34 level that needs to be broken. So again, talking about that consolidation that we were just mentioning there, price has been just stagnant here, just moving sideways for multiple weeks, right? We're looking at a weekly chart here. Let's look at the daily. There's the daily chart, even more evident. And so if we can break through that 496.34, then we'll see a continuation. If we start breaking down under 484.39, this low, it could mean some trouble for a little bit. We might see that pullback that a lot of traders are expecting. The QQQ ETF. I mean, again, a lot of consolidation, right? Nothing major happening here on the daily chart. In fact, it was down 1.54%, and it created a very bearish pattern. It's called a bearish engulfing pattern. It's when you have that small bullish candle followed by a large red candle. So that is not good, but it's still holding up above the cloud. And if we look at the Qs on the weekly chart, again, also consolidating. They're technically under the Tenkan currently. The SPY also in this tight consolidation under the 696 level. And you can see that it's holding up above Tenkan on the weekly chart. On the daily chart, it is under Tenkan. Nothing happening here except for the fact that we are just waiting to see if price can pop through. What I don't like is what I'm seeing here with the directional movement index. The negative DI is currently above the green line, and the ADX is moving up. So that is not good. But that was, part of that. It has to do with the VIX, which we're going to talk about in a second. So here's the FEZ. This is the Eurostox 50 ETF, and this one also has pulled back a little bit. It's still very strong, and I mean this, unlike the other ETFs that you see here, the Eurostox 50 has been breaking above levels like that $66 level, which was a monthly level, which goes back to these dates right here, all the way back to 2007. So that just happened recently, actually, back on January 30th. We closed above that level, the $66 level, and we're at 67.08. Here's the weekly chart. It is kind of slowing down here. Daily chart, same thing. We're just seeing consolidation right now. The Russell 2000 up 0.23% today. It came down to this 258.20 level. You can see that the wick, which represents where the price movement of the day, right? So when you're looking at a Japanese candlestick like this, the body represents the opening price, and that was the closing price at the top that created the bullish candle. And the wick represents the movement of price, and it dropped throughout the day, came very close to 258.20, and then buyers stepped in and started buying it up. Actually, we're looking at a 4-hour here. Let me just switch it to the daily so we can look at that better. On the daily chart, it's like a doji, which means that the opening price and closing price are at the same level. So we can see that on a 5-minute chart. This is what it looked like today. The green line represents the opening price, so you see price gapping up. Okay, didn't really stay up that long, and it dropped throughout the day. And then remember, I mentioned around 2:15 p.m. or so. This is where the Russell started to recover, got back above the cloud on the 5-minute chart, and basically just got up slightly above the opening price. I'm sorry, the up above the closing price from yesterday, which is that dotted red line. Okay, VIX. Okay, let's look at that's the 5-minute chart, but let's look at the daily. So that as well, as you can see here, re-entered the cloud again today. That's the wick represents the high of the day, and then it closed back under the cloud. So that's a good sign because the volatility started to come out towards the in the afternoon, right around that 2 p.m. So one of the things that you'll see is an inverse reaction of the VIX and the S&P 500 and the index ETFs. When these are moving up, the VIX is usually dropping. So you can always use both to sort of confirm what's really happening in the markets. Okay. And we want to see this dropping. That's very important. All right. Now let's take a look at some of those Mag 7 stocks like Tesla. Start off with the daily chart. It's still consolidating. It's only up 0.04% for the day. It's under the cloud, which is very bearish. Okay. Again, one of the rules of Ichimoku is you don't want to be adding new positions to your portfolio in stocks or ETFs where the price is under the cloud. That's a bearish situation. It's also under the 9 period. It's under the 26 period. We had a negative crossover here with a faster moving average crossed under the slower one. That Chiku span, remember I mentioned earlier, that's underpriced 26 periods ago. That's also bearish. And if you look at the cloud, it looks like the Senko span A is about to cross under. So it's not looking pretty for Tesla right now. Apple is inside the cloud. And although we've been seeing a little bit of a recovery here with Apple, since these lows of $244, it has moved up about 10.5%. It's still inside the cloud. The cloud is still bearish. Chico span is still underpriced. And so we don't have all the elements of the indicator confirming that we should be jumping into this yet. Meta, although it is technically above the cloud, it has pulled back quite a bit. And the good news is it's finding some support right at the 200 and the Tenkan. Notice how there was a convergence right there of those two moving averages, and it stalled. So I think there's a higher probability that we might see Meta bounce tomorrow. But the, the reality of the situation is, if we look at the weekly chart, the faster moving average is still under the slower one, and the Chico span is underpriced. So you don't have confirmation on both time frames. So you might be getting into a position that's not as strong. I personally like to look at both time frames, the weekly and the daily, before making a decision on adding a position. And if I'm not getting confirmation on both time frames, I'm basically not adding positions in any stock or ETF. So those are the types of stocks that I recommend. Also, when I'm creating my watch list every weekend, I'm only looking for the strongest, basically. Right, so we got Microsoft here, and you can see it's like dropping down 2.87%. This is what nothing positive happens. You've heard the whole saying, nothing positive happens when price is under the 200-day moving average. Well, nothing positive generally happens when price gets under the cloud either. It's very bearish, right? So you can see the series of lower highs, right, and lower lows. We're stair stepping its way down, and we've got ourselves a nice downward channel in Microsoft. So I'd stay out of that one, obviously. Netflix is also today something very really negative happened. It broke under that 82.11 level that I was talking about for so long. We had that consolidation happening here. Basically, the sector just brought it down, and you can see here the negative DI started moving up, positive DI moving down. You've got the ADX moving up and slightly higher volume today than yesterday. That's really negative. I'll tell you why. If you go back again to on the weekly chart with Netflix, you'll notice that we did have that support back here in early 2025, and then again a second time, and then basically we were retesting that area, and now it's broken. I will say this, however, right? So because it's still just Tuesday, and because we are looking at a weekly chart, price technically can come back above that 82.11 level. We still have 3 days left, 3 days of trading, Wednesday, Thursday, Friday. So if, I don't know, this specific stock starts to rebound and get back above that 82.11, and we create a nice, that will actually create a nice bullish candle because this candle has not fully formed yet. We'll have a wick on the bottom, we'll have the body on the top above the 82.11, and that will be very, very strong. So I'd wait until Friday to see what happens, but it's right now it's not looking pretty for Netflix, as you can see here. This is today's drop. All right, let's go into these now. I'm not going to spend too much time because there are 35 stocks and ETFs here, so I'm going to run through these quickly. And again, the strongest ones are on the top. They're highlighted with a blue flag. Everything else is something is off technically. I wouldn't recommend it. CTVA Corteva Inc. Very bullish on both the weekly, as you can see here, and on the daily. Okay. And we're getting close to that 75.91 level, that prior high. We're just 1% away. So it's almost at its target. So I personally wouldn't be adding a position there because of that resistance level. GWW also looks great here on the daily chart. And it broke through that level right there. It might find some resistance next at around $1,222 or so, around 6% away from where we currently are. There's the weekly chart for you. And that just turned bullish. So that looks really good. This is in the industrial sector. HUB, Hubble Inc., technology sector. One of the few technology stocks that's actually looking pretty good today, up 1.67%. Here's the weekly chart, very bullish cloud. Prices moving steadily up. Daily chart, same thing. ROK, Rockwell Automation Inc. Hopefully you're seeing the advantage of how quickly we can assess the strength of the chart without trying to microanalyze everything here. The idea is to spend just a few seconds and trying to quickly assess whether or not something is even worthy of investigating further for a position for a stock to take into your portfolio, to add to your portfolio. ROK on the daily chart looks really positive. On the weekly chart, it looks very bullish. Multiple weeks here. Look at how many weeks it's been above the moving averages. I mean, just from this pop up here where it closed under the 9 period and then popped right back above, it's moved up 23.62% and it's still running. TRGP looks good. It's in the energy sector, which is a strong sector currently. You can see the future cloud has just turned bullish. Prices above the moving averages. The Chiku span, the white line there is above price. I'm sorry, yeah, 26 periods ago. And directional movement index looks good too. So I like TRGP. There's the weekly, there's the daily. Exxon I like. Here it is on the daily chart, up 3.85%. You can see pulled back, stalled at the Tengen, and then started getting bought up. All right. And so you can see all that in the 5-minute chart right there. This is the whole day. So at around, basically at 9:35 a.m., it was above. Again, you can utilize this indicator on multiple time frames, depending on what time frame you like to trade. Some people are day traders. They might even use it on a 1-minute chart. That's what you're looking at right there. Okay, so it's showing that there was a little bit of selling happening, obviously, at the end of the day, with traders taking profits. Here's a 3-minute chart, and there's the 5-minute. Now, the rest of these guys looking pretty weak, in my opinion, and they're basically stocks I would not consider. I would just skip them altogether. So let's explain ARES, Ares Management. It's under the cloud. You can see it's obviously down. It was down 10.15%. Okay, very negative. Boeing, not as bad because this one here on the daily chart has pulled back. It's still under the moving averages here, but it's so close to the Tengen. All we need is a couple of days and it could pop. So on the daily looks like it's has some potential. And the weekly chart, it is still very bullish. Okay, we still are above the moving averages. We still have a bullish cloud. The Chiku span is above price technically, even though it's really close to it. but the daily chart has not given us a buy signal quite yet. Let's see, BAM, that's Brookfield Asset Management. Look at that daily chart. It does not look good to me. I mean, it also today broke under that low. That is extremely bearish. Look at the ADX moving up. Look at the red line moving up, the green line moving down, high volume, the cloud turning bearish here. There's a lot of things happening. They're very, very negative. We're under the 200-day moving average. And we've been under the cloud since this date right here back on September 25th of 2025, and we've dropped 18.59%. Every time this stock tried to recover, it met resistance at that 200-day and dropped. Came back here, dropped. Came back again to the 200 and the top of the cloud, by the way, and dropped. BX, Blackstone, under the cloud. No on that one. Here's the weekly chart. Also looking very bearish. We might get some support at the 200, another 6% away, but I'd stay out of it. Carlyle Group looks stronger on the weekly chart. We just let me get rid of these lines for a moment so I can show you from the perspective of the Ichimoku how this is a positive situation that has occurred right here. The faster moving average where it was under, had it crossed under, it crossed back above. The negative part with the weekly chart is we're still under those prices, still under. So we need at least one very bullish candle to form. And I'm not sure that's going to happen this week necessarily. Here it is in the daily chart, and you can see the negative crossover, and Chiku span is under price. So we're not there yet. Salesforce, heck no, wouldn't touch that one. Look at the weekly chart. It's the 200 moving average has failed. That's the dotted yellow line you see right there. It's failed, and price is now breaking through. And when you start seeing price also breaking through lows like this low, that's not something to be really excited about. It's actually kind of scary. So I think that this is going to probably continue to the downside. I'm also noticing the momentum here. Just check out that momentum. The ADX just going straight up, and the red line is moving up, and the green line is moving down. Remember what I mentioned earlier? This is a very negative scenario. We don't want that. CrowdStrike. No, it's just entering the cloud right now. We have a negative crossover here in the weekly chart. We haven't taken out this low, so that's a good sign. But and here's the daily chart. On the daily, it's under the cloud and still continue to drop. And you can see that not looking good either. The direction movement index. DHI, DR Horton Inc. is technically above the cloud in the daily chart. Notice that the cloud is also very thin. A lot of crisscrossing happening here. And so that's indecision, obviously. In fact, if you take a look here, see this high, and we're still under that declining trend line right there. Price came up to it and dropped. All right, we get what's called a symmetrical triangle formation here. So I would stay out of that one too, even though price is above on the daily. And I'm guessing the weekly chart, let's take a look at that. Yeah, the weekly chart is kind of a mess too. You get the crisscrossing happening, the faster moving averages under the slow one. Okay, it's just the Chiku span is inside the candle. So no. Indecision. It was up 2.71%, but nothing to get excited about. GWRE is also dropping still, week after week. You can see it broke under the moving averages up here in October 31st, 2025, and it's dropped about 44.77%. And here's the daily chart. So do you see how quickly you can, assess the situation? It's like keeping it simple, right? Now, I've also superimposed a lot of the fundamentals above here with profit margins and the capitalization, the sales growth rates, and all that. So this is all the fundamentals might be perfect in a company. They might have fantastic fundamentals, and yet, if there's no demand and there are no buyers, guess what? It's just still dropping, and the price of sales is not even like really that. It's at 15.57, which means that it's not like a cheap stock, even at these levels yet. Okay. You're looking for a price of sales that's a lot lower than that. HUBS, HubSpot, is also dropping still. No, on that one. I mean, the last from the highs up here of $884 back in just February 12th of 2025, guys. Just a year ago. Within 1 year, this stock has dropped 72.41%. Are you sure this is the right time to get in? Just because it's dropped so much? I wouldn't bet on it. And I don't want to be the first one to get to jump in. I'm waiting for I want to see confirmation by a lot of money coming into it. I want to see the whales come in with a lot of volume buying it versus selling it off, basically. IGV software index still dropping from the highs up here of $118. This has dropped 27.64% in approximately, how long has that been there? 3.2 months into it. No, obviously you can see it's very negative. Under that 200-day, got into the cloud, it dropped another 31%. And from the point up here where it actually dropped under the moving averages, okay, it's dropped 44.19%. And that was back on August 1st of 2025. Technology, this particular company, yeah, has been punished quite a bit. JP Morgan, I mean, this looks a little better because it's re-entering the cloud. So that's, one of the first signs of stock, where buyers are starting to step back in and they're pushing through levels of resistance. So the cloud itself is actually, once the price gets under it, it is a level of resistance as it tries to come back up. You can see what happened right there on that candle. Price dropped. It came back up to the cloud, found resistance again for another day here. But today, JP Morgan popped 2.18% into the cloud. Is this the right time to get in? I don't think so, because as you can see, all the other elements of the cloud are very still mixed. We got a bearish cloud. Chico Spin is under price. KKR is still under the cloud. No on that one. KVYO is under the cloud. No. Lazard Inc. is under the Tenkan on the daily chart. Let's look at the weekly. On the weekly, it looks like it's holding up barely. See, the Chico Span is just barely above the candle. The price is barely above the moving averages. The cloud is still bullish. So this one might recover. ServiceNow is a mess from the highs here of $238. It's dropped 54%. That's a big drop. So, yeah, no thanks. Blue Owl also continuing to drop. Lower highs, lower lows, downward channel. Right? There's a downward channel there. Let's see. P8NW Palo Alto this week on the weekly chart dropped under the cloud. It also, again, we don't know for sure though, because we do need to wait to see how Friday, basically, because this candle is still forming. Let's look at the daily chart though. It's just really bearish. No. PagerDuty. I don't even know who brought that one up, but look at this one. This is also quite a mess. Let's throw the monthly chart on that. Wow. So this goes back this became public back in 2019 at a price of around $36.75. It reached a high right about here of about $60 or so, and now it's down to $8.92, all the way down here. These are monthly charts. This is a monthly chart, so these are months. Each one of these candles, and so yeah, that's not good. PHM is a monthly that looks good. Holte Homes, but let's go to the weekly. It broke back above the moving averages. Chico Span is above price. We have a bullish cloud, but the faster moving average is still under. But this has potential on the weekly. On the daily chart, it broke above. So we're almost there with that one. PLTR, Palantir, is under the cloud on the daily chart. And on the weekly chart, it's under the moving averages. So no on that one. Rocket Companies on the weekly chart is under the Tenkan. On the daily chart, it is, you can see the faster moving average crossed under. We came down to the 200. We bounced. We broke back above the cloud. We basically gapped up today, up 8.42%. But what happened was price came to that resistance level, the 26 period, and then started getting sold off. Um, so it's a lot of volatility here with Rocket. Let's look at the next one, Snowflake. No thanks on that one too. Down 9.15%. Yeah. Stephanie Link will be buying this, and she'll be waiting for a long time, in my opinion, before this thing turns around. Um, yeah, because the next level of support, technically, from a technical perspective, right? Because it broke through this level. Now, I could understand if it came to this level here, the $188 level, and it stayed above that level. It might have made sense. Okay, I could see from a technical perspective that there's a possibility of a bounce. But today's action, okay, disqualifies that support level. Now it's broken. And the next level it's most likely to come down to is probably going to be, let's see, down here, around 137, which could be another 26.6% drop. I mean, nobody can predict the market, but that's how price typically tends to drop to the next level of support. And then, the buyers typically start to step in at that point and, you know, they try to see if they can make it move. Like over here, it stalled at that level. You can see around for like basically 2 days, it stalled right there and then it dropped. So you got Team, which is Atlassian Corporation, another technology stock. Ooh, get this one. Under the cloud back here in March of 2025. And it got under the moving averages up here on the daily chart. It's dropped 65.75. By the way, notice one other really key thing. Um, price came up to the cloud and dropped. Okay, it stayed pretty much the whole time, either it stayed in the cloud or under the cloud. There was just one moment right here. I don't know if you can see that. These little two tiny candles back in July of 2025, where it looked like, hey, there was a possibility that something might happen there. But the 200-day was lurking right above. So that was probably not the best time either to get in. Okay, because it was like not that far away. And then, of course, it dropped. So no on that one. TOL, Toll Brothers. Let me start with the weekly. I like the weekly chart. So it's emerged above the cloud now. There's more interest. Notice how the directional movement index is starting to become bullish on the weekly chart. It's in the residential construction industry under consumer cyclical sector. And on the daily chart, we did spike up and then it came right back under and stayed in its comfort zone between the Tenkan-sen and Kijun-sen. I call that the equilibrium zone. And so it was up 0.67%. Toll Brothers has some potential here. All right, but I wouldn't be jumping in quite yet. That wick again represents the selling. So the high of the wick represents the high of the day. The lower part of the wick represents the low of the day. And this is the opening price and this is the closing price. And if we switch it to a 5-minute, you can see that all that selling taking place at the end of the day. If I switch it over to a 5-minute. So there's the spike here on the third, reach that level, create a shooting star on the 5-minute, started dropping sideways, drop some more, and then started recovering a little bit and re-entered the cloud. All right, let's go to the next one. Yeah, so many stocks today. TTAN, under the cloud. Okay, under the cloud. Not looking good. Let's look at the weekly chart. Oof. From the opening price back here, it's dropped about 32%. And this became public back on December of 2024. Okay. TWLO, Twilio, also declined to 8.75%. It's under the moving averages here. It re-entered the cloud. That's actually a bearish sign when you see price entering the cloud. But let's look at the daily chart as well. Oof, yeah. So notice how it was finding support there at the 200, the dotted yellow line. Found it yesterday as well on Monday. But today it gapped down, continued to drop. high volume, down 8.75. So good. And Zoom on the daily chart also pulled back, found some support at the Kijinsen here. The cloud itself looks bullish. Um, Technically, the Chiku span is above price, but it's been declining. It's getting close to like maybe crossing, but I don't know. This might be a nice pullback for Zoom on the weekly chart. It doesn't look terrible because we are above the cloud. We have a future bullish cloud. Zoom has already taken a huge hit from the highs back here, 2020, when it was going for around $500 a share, and it's dropped 85%. Dropped even more, when it reached these levels. And for multiple years, it was consolidating. It was in a state of, I don't know, just zombification. Okay, not much happening. It was just like a zombie, and now it's popping. It's popping all of a sudden. Some interest. This is how you can recognize when money starts coming back into a stock. You start seeing the buying. So this low here, for example, from August 15th of 25, since then it's moved up 27.9%. But it's not like huge moves, right? So, and that, oh, there was one more company I want to do for one of our members, RCAT. Let's take a look at this one. Red Cat Holdings. Let's take a look at Red Cat Holdings, folks. Let's look at the weekly chart. Now, profit margins obviously very negative here. EBITDA is negative, operating cash flow is negative, but the technicals look good on the weekly, up 4.55% today. Finding support at the Tengen and the Kijinsen. The ADX is moving up. The green line is not moving up because we see that little pullback here. Let's look at the daily chart. Daily chart has pulled back. It's currently in that equilibrium zone in between the two moving averages. We do have a bullish cloud here. Chiku span is still above price. We do have a higher high here from that high. We also are above that prior high as well, which is good. If I draw a trend line, for example, go ahead and throw one of those on there. Okay, so you can see how it popped. Whoops. Here we go. High is 1670. By the way, the software that I'm using here, it's called TC2000. And if you guys are interested in getting a $25 coupon, there is an affiliate link on my homepage. Let me show you guys. So that's pretty much the analysis here with RCAT. It's holding up technically. Okay, it's looking okay. The sales growth rate is 85.25%. So I guess that's what's leading this stock up. Next earnings are, no, this is old earnings. I don't know why this is. Sometimes the earnings here are a little bit outdated and they just don't, there's little errors and stuff. So you may want to check that out on FinViz, maybe RCAT. Let me just check that out real quick. See what's going on with Red Cat. Red Cat Holdings announces that an Asia Pacific ally selected its Black Widow. A SUAS is a competitive tender, marking a second recent regional military order with deliveries scheduled for 2026. Let's see what these guys do. I'm just kind of curious. Provide products, services, and solutions to the drone industry. Okay, so that makes sense why. Remember, we were talking about themes earlier, and drones were up. It also engages in the provision of distributed data storage, analytics, and services for the drone industry. The firm product includes DroneBox, which is a blockchain technology that records, stores, and analyzes flight data and information from a drone. It operates through the enterprise segment. The enterprise segment will focus on developing a hardware-enabled software platform of services and solutions to government and commercial enterprises and the military. The company was founded by Jeffrey M. Thompson in February 1984 and is headquartered in San Juan, Puerto Rico. Puerto Rico. Um, let's see. Let's see some of their stuff here. So yeah, it is a very small company. There are only 115 employees. So it's a more of a high risk type trade. It's a, so just keep that in mind. It doesn't look like they are profitable yet. There's no profit information here yet. But the company has done quite well. Year to date, it's up 79.7%. Okay. Oh, yeah. I was going to tell you guys how you can get access to that $25 coupon for the software, the TC2000 software. That's the trading software that we just saw me doing my analysis on. So you just click on my site here, Blue Cloud Trading, under 9 more links. Okay, this right here, you got to click there. Doesn't look like a link, but it is a link. This will pop up. You can read about my channel, scroll down, and you will find that $25 coupon right here. So you click on this link, new page will pop up. They also have a brokerage service. Okay. You enter your email here. If you have Windows, you download it for Windows. If you have a Mac, click on this button and click on the check. Yes, I would like to receive email related to TC2000 products. You will receive a $25 coupon towards TC2000 service courtesy of Blue Cloud Trading, as long as you haven't used that service in the last 12 months. There are 3 different pricing schedules that they have. So under monthly, click on that. There we go. You've got basic for $24.99. So you can try that out for free for a month. Premium $49.99 and Premium Plus $99.99. I use the Premium Plus. I would say Premium is probably the one that if I was just starting out, I'd want to use the Premium. And the reason is because there's a lot more features under Premium, like real-time scanning. Okay, most watched and trending stocks, morning pre-buzz, chart drawing tools, easy scan wizard. There's a whole lot more features in that software. You can also create alerts, up to 100 alerts under that. Okay, so it's up to you though. And if you switch it to different billing cycles, you can reduce that cost even more. So if you go like annually, for example, it brings down the price, as you can see here, to $41.65, and then biannual down to $37.49. All right, guys, that's all. Thanks for watching. Appreciate you all. One last thing I will ask before I leave, and that is if you can, if you haven't yet, hit the like button. It does help with the algorithm, so it gets pushed out to more people. And then also hit the subscribe button. Okay, it's free to do that. If you want to get extra content, members only content that I do every weekend, I go over my entire portfolio. I did one just 3 days ago. I also shared 27 new stock ideas for this week. Become a member. And to become a member, you click this join button and you would need to select Blue Cloud Trader. Okay. It does say euros, but it's actually US dollars. Okay. I'm currently in Europe, and that's why it's popping up that way. So Blue Cloud Trader or Blue Cloud Legend level membership, and you'll be able to access those videos. You'll also get daily trade stock updates, okay, under Blue Cloud Legend level membership. So, and if you want to support the channel, just become a Blue Cloud supporter as well. Okay, guys, that's going to do it. Thanks again. I will catch you all in the next video.